Welcome to the question clip on chapter 11, and we're going to be dealing with the question for idols traders. In this question, they deal with adjustments and the closing process, but we are just going to focus on the closing process as we've already dealt with the adjustments in chapter 10. We can have a look at the required part that we are going to focus on. In the C part, they ask us to journalize the closing transfers in the general journal at 31 December 20.2 and post to the following general ledger accounts of idols traders. So we are both going to do the journal entries as well as the posting to the general ledger. I'm just quickly going to show you the results of the required parts A, B, and D so that you can understand where this fits into the whole closing process. In the A part, they ask you to do adjustments. Adjustments we perform so that we can adhere to all the accounting concepts, including the accrual concept, materiality, all of those that we taught you during the previous chapters. So in the general journal for the adjustments, you'll see that they debit and credited certain accounts to adhere to the adjustments. And included in those are certain income and expense accounts. Inventory deficit, for instance, and expense, the stationery and expense depreciation as well. In the closing process, we want to take all the income and expense accounts after adjustments and close them off. We're going to close them off to either the trading or the profit or loss account, depending on the nature of the account. So in the B part of the required, they asked us to draw up a post-adjustment trial balance. We can now apply the account information from the post-adjustment trial balance and just use all of these income and expense items, where they start with the expenses there at stationery. So we're going to use all of these income and expense items and close them off to either the trading or the profit and loss account. So the post-adjustment trial balance, I would keep that handy if I were you, so that we can prepare the general journal entries for the closing transfers. That's going to be the C part of the required. After our closing process, we're going to be left with a post-closing trial balance. And you will see in the post-closing trial balance, there we have our equity account, the capital account, which is the result of all the income and expenses, previous equity, permanent equity, and the drawings, as well as just assets and liabilities. No income or expense items will be left in the post-closing trial balance, so we can use this trial balance to draw up the statement of financial position. We can use the two accounts that we have to draw up, the trading and the profit or loss account, to draw up our other important statement, which is the statement of profit or loss and other comprehensive income. So if we have a look at the required part that we are going to deal with, the C part, we have to journalize the closing transfers. So I'm going to get my framework ready, the general journal. It's at the end of the year because that's when the closing process takes place. So we're now going to use our post-adjustment trial balance and identify all the income and expense items that we want to close off to either the trading or the profit and loss account. Now, because the trading account is our starting point, that's where we want to calculate our gross profit. Now, to calculate a gross profit, we need to look at the trading activities of this entity. And the income or expense items related to the trading activities, we start off with the sales, and then from the sales, we deduct the cost of sales. Now, before we can close off sales to the trading account, we first need to get to a net sales amount. Net sales is represented by taking sales, deducting any sales returns from that or debtors allowances, and also deducting settlement discount that we granted to the debtors. Because remember, as a result of the original sales transaction, we could also grant settlement discount when the debtor comes to settle his or her account. So my first accounting entry would be to close off the settlement discount granted, because I cannot identify any sales returns here. So I'm going to close off the settlement discount granted to the sales account. Closing off means that we have to cancel this debit of 1,270, and to cancel a debit, I have to credit the settlement discount granted account. So that will be my first accounting entry. I'm going to credit the settlement discount granted. And I close this off to my sales account. And the amount that we're going to deal with is 1,270 Rand. That means that I've now included in my sales account the net sales amount after settlement discount granted. And if in other questions we had sales returns or debtors allowances, that would also be closed off to the sales account. The next item that we want to take to the trading account is cost of sales. And again, we can't just take the cost of sales. We want to include all the accounts that influences cost of sales before we close it off to the trading account to calculate the gross profit. Now for cost of sales, that was when you purchased. Remember, purchases is also included in cost of sales in the periodic. In this case, we had the perpetual inventory system, so cost of sales already includes purchases. And for the purchases, I can qualify for settlement discount received. So the settlement discount received account must now be closed off to the cost of sales. To get rid of or to close off a credit, I need to debit the settlement discount received. So I'm going to have a debit entry in settlement discount received. And I'm closing this off to the cost of sales. The amount for the settlement discount received was 630 Rand. That, however, is not the only expense that influenced my cost of sales. In adjustment number 1, we had an inventory deficit where we compared our physical inventory count with the amount that we had in inventory in the asset account, and that was an inventory deficit of 460 Rand. To close off a debit, I need to credit the inventory deficit, and I will close it off to the cost of sales account. So this will end up in my cost of sales, corresponding credit in inventory deficit, and the amount there is 460. So at this point, we have a net sales amount in the sales account after that closing transfer, and we have the net cost of sales in the cost of sales account after these two closing transfers. I can now finally close off the sales account to the trading account, as that forms part of my calculation of the gross profit. Now, sales had a credit total in my post-adjustment trial balance of 75,000, and I closed off the settlement discount granted to the sales account. So I will take a credit, which is the difference between the 75 and the 1270, and I want to close off that credit. So to get rid of the credit, I'll have to debit the sales account. And I'm going to close this off to the trading account. And the amount is the 75,000 minus the settlement discount granted, and that will give us 73,730. Okay, the next step to calculate gross profit is to take the net cost of sales and close that off to the trading account. If we got rid of a credit by debiting the sales, I'm now going to credit my cost of sales account. Corresponding debit in the trading account. Remember, for this, if you want to show in brackets your calculations, you'll start with the cost of sales debit of 24,000. I will deduct, because of that entry, the 630 Rand. And then I have to add to the cost of sales the 460 because of this debit entry in cost of sales. I'll have to add the inventory deficit to that. And the amount that I close off to the trading account will then amount to 23,830. It's always easier to do your calculations using accounting practice. So draw up a little cost of sales T account for you as part of your calculations. That will perhaps make this calculation a bit more clear. Okay, we prepared the trading account, closed off sales and cost of sales to enable us to calculate the gross profit. Now that gross profit will be the starting point in my next temporary account, which is the profit or loss account. So I will now have to close off my trading account, and the trading account at this point has got a debit of a credit of 73,000, and a debit of 23,830. So my balancing amount in the trading account will be on the debit side. Therefore, I debit my trading account. And I'm going to credit the profit or loss account. This is now the difference between the 73 and the 23,830, which will give me 49,900. That will be the starting point of calculating our profit for the year. This was due to the trading activities calculated in the trading account. And now we can just continue by adding to this gross profit all the other income items and also deducting all my other operating expenses. So in the remainder of this journal, we'll have to take the post-adjustment trial balance and include all the income and expenses that I have not yet closed off to the trading account. And we're going to close them off to the profit or loss account. So the first income item that I can identify is the rent income over there. We have it on the credit side. So to close off a credit, I'll have to debit the rent income. So we're going to do a combined journal entry where we close off all the other income items simultaneously. Otherwise, you're going to just waste time. The other income item that we also have to close off is the interest income. And from our post-adjustment trial balance, they amounted to 7,200 and 600 Rand. That's all the income earned during this year after adjusting it for certain accounting concepts. And I close that off to the profit or loss account. So the two of them added together will increase my profits with 7,800 Rand. I do the same for all the other expenses other than my trading expenses, which I dealt with in cost of sales. So I will run through all the items included in the post-adjustment trial balance and close them off to the profit or loss account. To close off an expense, I have to credit the expense account. So I'm going to start with my list. Stationery 1130. Insurance 1,600. Remember, the closing process deals with income and expenses. So at this point, we cannot include any assets or liabilities as closing transfers. So while you're compiling this list, make sure that you don't include any of those items. The rent expense of 30,000. We have depreciation. That's the expense account linked to the negative asset for accumulated appreciation. So make sure that you use the correct amounts. And last instance, our credit losses. So all these expenses being closed off to the profit or loss account. So I have a combined journal entry where I just take the total expenses on the debit side, 46,229. That's all of these credits added together. We had the trading account for the gross profit. We add to this gross profit of 49,900 my income of 7,800, and after deducting all the expenses of 46,229, I realized that I've now earned a profit during this period, financial period. That profit belongs to the owner, so I would want to account for it in one of the owner's accounts. So I'm going to credit his capital account. I calculated this in the profit or loss account. I will just take my gross profit plus my income minus my expenses, and that will be my final profit for the year. I can't just close off the profit to the capital account, but anything that the owner has already taken, I will also have to close off, and that means I will take the drawings for this financial period and also close off that amount to the capital account. Asseblief. Oh, hy moet net 'n bietjie uiter gaan, ja. Was hy? Ja. Was hy? Okay. Sal sy maak, dankie. So after we've closed off the gross profit to the profit or loss account via the trading account, the 49,900, all the other income items are also included in the profit or loss account, and we also closed off the expenses to the profit or loss account. We can now transfer the final profit or loss to the owner's account, and we're going to use the capital account for that. So we take the 49,900 plus the 7,800 other income, minus the expenses of 46,229, and that will be our profit that we close off to the capital account of the owner. So we debit the profit or loss account and we credit the capital account. Again, if you make use of a little T account for your calculations, I think you will get to the 11,471 much quicker. We're going to deal with the T accounts just now. We can also not stop here, because if the owner had already taken items from the entity, he can't take it again. So we will have to close off the drawings included in the post-adjustment trial balance. And to get rid of a credit, we get rid of a debit, we credit the drawings. So we close off the drawings account on the credit side, and we debit the capital account of the owner with the 3,600. So at this point, we've closed off all the income and expenses, either to the trading or the profit or loss account. And now I can show you The second part of the required, where we draw up the physical general ledger accounts. The first account that we're going to draw up is the trading account. And you'll remember we perform the closing transfers at the end of the year. So if we put our date here, the 31st of December, the first account that we closed off to the trading account was the sales. And that was the net sales after deducting the settlement discount granted. And that amount from your journal sales to the trading account was the 73,730. So we don't have to do the calculation again. We also closed off the cost of sales at the end of the year. And from my general journal entries, the cost of sales, again the net cost of sales after the adjustments, 23,830. And the purpose of this trading account was to calculate the gross profit. That's why you will see it's a calculation of an equity item. So my income was on the credit side and my expenses on the debit side. I can now balance this account, and the balancing amount, which is my gross profit, will be closed off to the profit or loss account. So I start my calculation of my profit with the gross profit there. So the account name will be profit or loss. This is now actually the gross profit. You will see this is a temporary account. So there's no balance carried down or brought down. I just use this to do a calculation of my gross profit. I got this from the trading account. This is also on the 31st of December. Then we proceeded to close off all my other income other than sales and operating expenses other than the trading expenses. So the income items again will end up on the credit side of this calculation. So I will include my rent income, as well as my interest income. And the two amounts there. And then on the debit side, that's where I list all my expenses. As per my journal entry. Depreciation. And in the last instance, my credit losses. So all of these expenses will decrease my profits. And then I can determine the balancing amount in this profit or loss account. It can either be on the debit or the credit side. So we first need to determine what the total, because total is. Okay, so if we add up the credits, we'll see they add up to 57,700. And that is higher than the debits. So if I take this 57,700 and I deduct my expenses, I get to my profit for the year, which belongs to the owner, and we transfer that to the capital account of the owner, the 11,471. So now we're done with all our income and expenses. If you refer to your post-closing trial balance, we've now included in the capital account the original capital contribution plus the profit for the year minus the drawings, and that is the final amount that will appear in the statement of financial position. Just remember, in this profit or loss account, you can also have a balancing amount on the credit side. Then you incurred a loss for the year, and that will influence the capital on the debit side then. So it's not wrong if your profit or loss account balances on the credit side.